Good afternoon, and thank you for joining the first of what's going to be many FSRA briefing sessions. The purpose of this particular series of sessions is to bring the community together and keep them briefing on what's happening within the ecosystem, and also shed some light on the application process. So, Gary, if you don't mind bringing up the slide deck, please. Thank you. So, as I mentioned, this is the first of our regular FSRA briefing sessions. There'll be two of them at any one point in time. The first one is today, and the next one will be next week. The first one, this one is relating to the capital markets and intermediaries area. And next week, we will have banking and insurance by my colleague, Mr. Fraser Brown. The agenda is a quick canter through the market development and ecosystem that we are seeing. And after that, the substantive part of the presentation will be done by my colleague, Matt Campbell, who will be talking about the regulatory updates, applications, process, and final thoughts. You don't have to take notes. We will be sending this deck as well as next session's desk together. And of course, we would be delighted to have any questions that you might have. Please feel free to put them through whichever mechanism you're watching, either LinkedIn, YouTube, or our site. So next slide, please. So the capital markets landscape has been quite extraordinary. I mean, I don't think I need to speak too much about that. But from our side, I think what we have seen is a significant increase in the number of inquiries and applications which are starting to feed through into a bigger application pipeline. Just to go a bit deeper into individual areas, on the brokerage side, we are starting to see quite a lot of interest in people wanting to establish brokerage businesses in the public markets, FX, and of course on the virtual sites. Fund inquiries have ticked up quite a lot across all the sectors: public equities, debt, Sharia, PE, and I'll come to and talk a bit more about VC slightly later. Arranging and advising, that's usually a pretty good place. Good increase in applications, people looking to register themselves at CAT4s. These are for arranging credit, advising, and of course, on some of the other aspects that are available on CAT4 licenses as well. One of the things that we have done is to encourage people to establish CAT4 licenses rather than registered offices for a variety of reasons. We've got a nice little comparison, which we can share if somebody needs it, which shows why a CAT4 license would be more appropriate rather than a registered office. It gives you more flexibility and can avoid certain issues that we have seen in other jurisdictions. The ecosystem is definitely growing. We are seeing a strong increase in fund administrators, compliance consultants, corporate service providers, law firms, and people who deal with other related matters in this particular aspect. FinTech, of course, is a fast and rapidly growing area. FinTech Abu Dhabi is coming up. I hope you folks can join that. Digital Lab is going to be going live then, and we have seen quite a lot of very, very fascinating business models that are coming in from the FinTech side. The SME platform is also something that we have started to discuss, and more information will be made available during FinTech AD and going forward. And of course, the engagement with the Middle East FinTech Association is again going strength to strength. They are one of our primary partners in this particular area, and I would encourage people who are interested in this area to go to their website and see the amazing stuff that they are doing. On the venture capital side, it's one of our fastest growing areas, literally exploding, so to say. We are now well into double figures of the venture capitals that we have got, and we should end the year with a substantive number of firms. And of course, we saw the launch of the Middle East Venture Capital Association that is also growing. For VCs or people who do need to liaise with the VCs, I would again encourage them to look at their website. They're doing some absolutely sterling work in that area. Next slide, please. Thank you. In terms of the market engagement, we of course had a bit of a different year, to put it politely. But still, in terms of the various engagements that we have had, the Funds Forum was one, FinTech Abu Dhabi is coming up. In terms of the webinars that we launched, we had conversations around Islamic finance, we had conversations around investor protection. The MEVCA VC webinar was very well understood and attended. Then we also had a few discussions around the impact of COVID in the investment world, et cetera, et cetera. ADGM also participated with several ADGM firms on webinars. The last one, for example, Steve Barnett spoke along with the Department of Health, Dr. Dirk Richer, on a healthcare report that was launched by one of the ADGM firms, so on and so forth. And we saw some good engagement on that. And the number of firms who are coming to us and asking us to speak on their webinars and market outreach pieces are also increasing. There is definitely increased engagement with the capital market firms who are registered over here. We are speaking to them constantly. We are asking them for feedback. We are asking them what can we do to assist. And there has been good engagement on that side. Some sectoral level engagement has also increased, whether we're talking about healthcare, whether we're talking about agri-tech, et cetera, et cetera. And all that engagement, as I said, with inquiries or applications has led us to some new members. So welcome to them. We've had broker-dealers, AvaTrade, Keyway, and Orion. On the Cat4, we had Apollo and INS. And as you can see, the good, solid business around investment management, 3C licenses. We've got Sarva, WealthFace, Olive Rock, Global Ventures, Oryx, Access Bridge, MSA Capital, Bridge9, VentureSouk, Phoenician Invest, ICGS Investment Management, Plus VC, MEVP, Yas Investments, and Hoff Capital. So these are the firms that we have seen within 2020, and hopefully we'll have some more coming up. So next slide, please. In terms of what is the forthcoming engagement, we are, again, as I said, planning to do more webinars in the banking and insurance quarterly briefing. That's going to start from next week. There's going to be some engagements and presentations and webinars we'll be doing on sustainable investing. We are, of course, doing the FinTech Abu Dhabi, and venture capital engagements will be more. We'll start doing some things around the sectoral pieces, which are, of course, healthcare investments. SALT Abu Dhabi will be coming up in the new year, as well as market engagement, specifically in some of the countries like China, India, Germany, France, et cetera, et cetera. And of course, if any of the participants wanted to speak about these forthcoming engagements or wanted to participate or engage with us in some collaborative activities, please let me know. So, bang on time, 10 minutes. So that's a quick overview of the market. Now, let me hand it over to my colleague, Matt Campbell, who will be taking you through the regulatory side. Matt?
Thank you, Dr. Basco. Welcome, everyone. I'm going to go through the capital markets intermediary side. The slide you see at the moment is the areas I'm going to touch upon over the next, hopefully not bore you too long, probably the next 20 minutes. And then at the end, we'll have questions that we're happy to answer. Next slide, please. Many will already know that I'm in charge of capital markets intermediaries for the authorisation and supervision. The firms that we approve and supervise are broken up into broker-dealers, fund managers, investment managers, advisors, arrangers, custodians, trustee administration and administrators, and everything in between. Fraser, who you'll hear from next week, will be discussing the banking insurance side. And also there is a third limb that we have, it's market infrastructure and products, and they deal with the exchanges and the MTFs and the OTFs. And a number of you would have been involved in the applications for MTFs and for virtual assets. I'm going to go now through the stages of an application, and these are my thoughts. Probably some of them are a little bit random, but I just want to have a discussion and a thought process, and I'll welcome questions at the end on this. I want to go through the meet and greet, and I'm talking about when it gets handed over from business development, Dr. Basker's side. We'll talk about the draft regulatory business plan, the application itself, the in-principle approval stage, and then the financial services permission. Next slide, thanks, Gary. A number of the questions, there was a survey done by business development a few months ago where they just wanted to gauge the industry, and there was a number of questions come back, and one of the recurring themes was, how long does it take? And the one response was, you know, our clients always want to know. And I'm a little bit surprised to that, because anybody who's been in to see me or any of my authorisation team, we're fairly clear of the timeframes with respect to it. On the meet and greet, we can't really say, you know, that should be completed within 1 week or 2 weeks. It all depends on you and your clients, how quick they can set up a meeting and talk. And we'll go through things in general at that meeting. We're happy to have, you know, 2 or 3 if it assists you and your client getting the application together. The next stage is the draft regulatory business plan. We don't want an application. We just want the regulatory business plan, which is section 6 of the general application, the JIRA. And I've got another slide on that and we'll talk about it. Application, again, that's a matter for you guys. You know, we can't control the time frame around the submitting the draft business plan, and if we're happy with it, then you're submitting the application. What we can control is the in-principle approval. So at the time of we receive the application to the time that the authorisation committee sits, and if it's approved, that will issue an in-principle approval, which basically says to your applicant, look, subject to the following conditions that you need to meet, we're minded to grant a financial services permission. From the time of receiving the application to an IPA, it's usually 4 to 6 weeks till we get it to the committee and issue it, but that's predicated on one thing, a good application. Unfortunately, a number of the applications are so poor, they meander, they really don't hit the point. And I wonder sometimes about the thought processes around people answering the questions that are in the application form. It does concern me at times, and I'll come to a particular point. Financial services permission, that's the time we issue the IPA to the license is granted. It can be anywhere from 2 months and sometimes well over 12 months. And it's really the ball's in the applicant's court as well. The IPA letter allows them to go and incorporate a body with the registration authority to retain lease premises, to set up bank accounts, and to meet a lot of things. Like I know we put up preconditions and say, well, we need to see the fitness of your compliance officer, your finance officer. At the stage of the application, they might not be in a position to really focus and nominate particular people. So we give them time in that application period. But Jira this year, it's probably slowed it down a bit from the IPA stage. But the one thing I'd say is interesting. We're almost double the numbers for the IPAs and FSPs that we issued in 2019. And we've still got roughly 6 weeks to go. I'm fairly confident we'll double IPAs issued and FSPs granted over 2019. So as Dr. Basker said, the activity, the interest is really hasn't stopped. It hasn't abated. A lot of things are happening remotely because of COVID, but things are looking good. This centre is going very well compared to my experience with other financial centres in the region. Next slide, please, Gary. Okay, stages of application and what goes wrong. The draft business plan, we liked after the meeting, after we talked, we feel that your client or your applicant has merit. We ask for a regulatory business plan, which we say go to section 6 of the JIRA and then set out what it is. The thing that I really have concern about is some of the applications, some of these regulatory business plans are appalling. Basically, somebody's just cutting and pasting extracts out of the applicant's own internal documents. There's no thought process around what's the question, what do I need to address? And there's no mapping. What it's got to do, it's got to map, section 6 has got to map against the actual regular activities that you propose to do. There's many times, and I know Dr. Basker uses the term, people come in and say, I want to apply for a category 4. And I go, well, you're applying for the regulated activities. Depending on those regulated activities will govern what prudential category you fall in. But we seem to all fall in that trap. Don't worry about the prudential category, worry about the regulated activities and what your applicant or your client's going to do and map it against that. That's what we want to see in the draft business plan. An unclear regulatory business plan gives me concern. It tells me that perhaps the applicant's really not suitable for coming into the ADGM and being regulated by the FSRA. It's a threshold condition under our rules that the firms must be able to be regulated. And if they can't enunciate what they want to do and map that against the regulated activity, really, maybe they shouldn't even be applying in the first place. And it's not easy. You've got to put the effort in. So put the effort in the regulatory business plan. Thanks, Gary. Next slide, sorry. What goes wrong? Carrying on what I just said, read the question and the guidance, if there's guidance around the question, read the thing and answer the question. Don't just cut and paste parts and pieces and think that's good enough. It just doesn't all go well. Just read the question. And finally, before you submit the application forms, read them. Please read them, because the amount of just terrible little errors and spelling errors it's just not coherent and it doesn't flow. Please spend the time on reading the application before you submit. Gary, thank you. Source of wealth and source of funds. Anybody who knows me is listening will know this is probably one of my biggest bugbears. When we assess a firm to come in, we carry out enhanced due diligence. We basically we look at every applicant and every financial services firms as being high risk. And we want to so we apply enhanced due diligence on those applications. And part and parcel of enhanced due diligence is understanding the source of wealth and source of funds. Where is the applicant getting its money from? How he or she or the entity make its money? Please give me an essay. Don't just say, well, they'll send in a bank statement and say that's good enough. That's not good enough. And it's incumbent upon yourselves to really drill down on this, because if you don't, we do. And all it does is slow the application process down. Also, source of funds. How are you going to send the money in the first place? Where's the money coming from? Is it coming through a recognised bank. Get all those details in when you actually do the application. Next slide, Gary. This is interesting. There was a number of responses in the survey where there seems to be confusion around capital, regulatory capital, and working capital. And to be honest, I was aghast. You know, we all should be up to speed on this now. Capital is your equity. Regulatory capital is equity subject to deductions and other conditions, which are found ostensibly in Chapter 3 of the Prudential Rulebook. You've got to read it. You've got to understand what meets regulatory capital and what doesn't. Working capital is just how much money you got to spend. Under the Prudential, under Chapter 3 of the Prudential Rulebook, of course, you've got to be able to focus on what capital, where is it coming from, how does it meet the requirements. I had a discussion with one of the applicants and their advisors last week, and it's almost ready to go to committee, and they put forward a capital of, for example, $500,000. And when we work out what their capital requirements is, it was a Prudential Category 3C. So the regular activities is managing an investment fund. And as you well know, the test is either the base capital of $250,000, or the expenditure-based capital amount. In this case, I think the expenditure was lower, so it's $250,000 US. We always have, under the Prudential rules, you've got to have a buffer of 20%. So that brings it up to 20%, 550,000, or no more, sorry, nearly 600,000 US dollars. The applicant was only willing to put in a small amount above that minimum capital requirement. And their argument was, well, we'll start making money straight away, so don't worry, we'll never breach capital. We don't look at it that way. If you're making profit from day one, I'm very happy for you. My experience is a lot of firms don't start making profit until at least 6 months, maybe even longer. That being the case, you're going to burn through amount of your capital in that 6-month period. So what we always suggest is please think about how much extra money I need to put in as capital, so I have that 6 months buffer. If you don't have the 6 months buffer, it's a difficult argument to be put before the authorisation committee why we should approve this firm. And you can't count your interim profits. If you read the Chapter 3 of the Prudential Rulebook, interim profits cannot be counted unless they're audited. And I just don't believe any firm would go and get an auditor's report on interim profits for those months as it goes through. You're wasting our time. You're wasting your client's time. Always insist on having a sufficient buffer. The higher, the better. Thanks, Gary. So I've already started talking about it. So rule of thumb, do not even put the application in if it's less than a 6 months buffer. You're only going to get pushback from my team to move on. Thanks, Gary. General observations that I've seen from the applications. If you don't know the answer, don't guess. Ask. We're willing to have discussions with applicants and their advisors on issues. Don't just put anything in. I hate cut and paste. If you're too lazy to answer the question by just cutting and pasting, then you're wasting my time. And I question, why should I even look at this application? Put an effort in. Look, I really look to the compliance officer's function to be our eyes and ears of the regulator. We're a risk-based approach, and we impact and risk rate our firms at authorisation and as they move through the supervisory cycle. One of the most important factors is a compliance officer that knows what they're doing and also devotes enough time to the firm. It really worries me when I see firms trying to think they can get away with just 4 hours from an outsourced compliance officer. We've got a thematic review that we're going to kick off late this year and into next year. There'll be a survey coming out to all firms and yourselves as well, are asking a number of questions around the our recognised persons regime, the compliance officers in particular, the money laundering reporting officers, the finance officers. I'm not sure if it's working that well. The idea is that the firm does the due diligence on the compliance officer, MLO, finance officer, and the quality of some compliance officers and finance officers that I've seen leaves a lot to be desired. I know we're trying to lift the game, but we're all professionals. You've got to take pride in your work. And I'm giving a plug for the Compliance Officers Network Group. This came about late last year, and it was the thinking of the FSRA that there would be good to have an independent group where compliance officers go to, education, discuss issues, and that group's been running now for approximately 12 months. I will attach the email address for the Compliance Officers Network Group to this slide pack. I encourage anybody who's not part of it to look at it. Thanks, Gary. That's right, new developments. We're moving the paper-based applications for authorisation and the supervision processes into a digitised system. It's going to be called FSRA Connect. All the application forms, all the inquiries, all the discussions will take place on a platform. The aim is to streamline it, to make it easier for everybody, including ourselves, but also the applicants and yourselves. The authorisation phase will be rolled out, I understand, probably the first quarter of 21. We were hoping for late this year, but we're trying to get everything right. That's going to really affect anybody making applications to CMI, my team, or to banking and insurance as well. And the supervision and the enforcement part of it should be expected in the second quarter next year. Thanks, Gary. As I said, we've looked at the feedback that was done by business development on the survey. We're going to put together a FAQ to a number of the questions, and we'll post that on the website. It'll probably be late this year, maybe early next year. All right, that's my end. I'm going to hand it back to Gary to open it up for questions. Thank you very much.
Good. Thank you very much, Matt, for that very, very useful and clear guidance, if I may put it this way. And look, I mean, whilst we're waiting for some questions to come through, let me give a bit of a background to this. Because I keep on saying, we, between us and market development, business development, and the FSRA, our job is to make sure that firms in this particular area or the advisors, they are able to turn around good quality applications, good quality clients. And look, everybody wants to do business. The application process, the initial conversations, the discussions, the more we can make it more efficient, the better it is definitely for you and of course for us as well, because that will feed us, feed the client through the process ASAP, and then they can get on with the job of actually doing what they wanted to do, to carry out the regulated activities. So we did have quite a lot, as I said, a sharp increase in the inquiries. We had some conversations, and obviously now that we are kind of moving online rather than having, as used to happen before, face-to-face conversations, we are seeing quite a lot of, let's just say, less of physical hand-holding, and there is quite a lot of online pieces. And that obviously means that the nuances sometimes can be lost. You might actually have different people explaining over a phone in a different way. You're not able to sit down and look at a printed document. So the background to this was, in effect, let's see whether we can help our customers and applicants and the advisors to go through this in a good way. So let me ask a couple of questions to Matt about this. In terms of good applications. Now, of course, he's focused on the areas that can be improved upon. But Matt, what are your thoughts? I mean, when you sit down and you look at an application, what are the things that jump out which tell you, okay, this looks good?
Okay, and it carries on what I said in the presentation. It's got to be clear and concise. You pick up applications and they seem to think that the more words they jam into the application, the better the application. I don't know whether they're getting paid by the word by their applicants, but you don't. Less is more. Just focus and be concise in your writing on your app in the application. Don't waffle on. If you said something in one part, don't go and cut and paste those paragraphs again in another section, unless you've really missed the first question and you don't know how to put the application in. There's so many times I see the same sentences and phrases repeated time and time again in the same application. Read it, understand it. Think you're in university days, and you've got a word limit. And you've got to get the message across to your lecturer about what you have to cover, but in the less amount of words.
Thank you, Matt. Matt, would you be able to shed a bit more light on one particular area, that is the ultimate beneficial owners? That seems to be an area which sometimes is a bit unclear. And of course, you got the economic substance rules and other questions that are coming in. But if you could spend some time talking about the ultimate beneficial owner section and area, that would be beneficial.
Sure. The ultimate beneficial is the individuals that control the financial services firm. And there might be a hierarchy of ownership that you follow back up the tree till you get to the UBO. UBOs are usually individuals. The only ones where you would never have an individual is the end of the top entity is something that's listed on a stock exchange somewhere. So if you say it's widely held share, that's fully accepted. But most of these firms are not held by a firm trading on a stock exchange. So it's the individuals. The rule in the general book is that you've got to identify any controller 10% and above. Controller is somebody who's a firm or an individual or corporation that holds more than 10% shareholding or control in that entity. So it's not just looking at the shares. You need to observe, is there somebody else who doesn't have a shareholding but still controls this entity? So we have to, on a number of occasions, keep going back to the application and saying, thanks, you told me who the next corporate entity up the line is, but you haven't shown us who the ultimate beneficial owner is. And we need that for two reasons. One, these are financial services firms. We want good quality, fit and proper owners of the firm. So we need to do our searches. We put the name through WorldCheck. We do a number of other searches to make sure that those people meet that criteria. And also under the, when you apply to incorporate this body, the registration authority keeps a register of ultimate beneficial owners. And it will be incumbent upon the application or the applicant to also disclose that. So you've got to do it anyway. So trying to hold it back for some reason just doesn't make sense. It just delays it, it prolongs it. And it can be frustrating because I know you and your applicants want to get the process through, but you've got to meet the criteria.
Thank you very much, Matt. One of the things that we have observed, and one thing that this is specifically for advisors, CSPs, lawyers, etc., etc. Sometimes the initial conversations seem to be done by the request has been pushed down to the most junior member of your staff who hasn't got experience of doing this, and just go and speak to them and they will walk you through. What we absolutely are helpful, and we try and give the details. But one thing that does seem to not go down that well is if basics of the financial markets, if the basics of the regulated activity, how to deal with the regulator, I think it might be beneficial for both sides if you do spend some time in training your junior members of your staff to speak to us, to understand what they are talking about. Because this is not the place for, as in the basics. We would normally expect your junior member of staff to actually have gone through some kind of a training program, understand what you're doing, at least give them a briefing. That would definitely help. So another question for you, Matt. We were talking about capital. Would you be able to explain a bit more on the expenditure-based capital minimum that we put together? And what was the basis on which we have put down our standards? And what do you see in the expenditure-based capital minimum? Some color around that would be useful, please.
Okay. The expenditure-based capital is your forecasted operating expenses for the first 12 months. I know firms, we do say, I think it's still in the application form, that we want 3 years, but we really want to focus on the first 12 months of your operations and do it month by month so we can see the flow of cash through the enterprise. So it's the normal operating expenses. There's some expenses that get backed out, like bonuses and things like that. You can find it. We list all the types of expenses that we expect in there, and the ones we don't have to count. One thing I am concerned. There seems to be a propensity of under forecasting what your operating expenses are. Applicants put in a set of financial statements where they're saying they're going to get on. Provide the financial services on the smell of an oily rag. There's just no substance in the actual expenditure. Their salaries are low, their rents are low, and they seem to think they're gaming the system by gaming it. The lower my expenditure-based capital, the less capital I have to put in. You just look. We didn't come down in the last shower. We know what a firm usually spends. And be realistic. If your clients start to push back on you, I expect you to be pushing back them and saying, look, let's be realistic. You're going to spend a lot more than what you're proposing here. So we all have the intelligent discussion rather than me having to push back and say, look, I just don't accept this. It just doesn't make sense. And and on the further question, Dr. Basker, about what makes it up. It's fairly simple. The capital requirements are clear in Chapter 3 of PRU. What type of capital equity makes it up? Equity is the purest form, although you can go into different levels. As long as you pass the basic requirements, you can make up your regulatory capital with shareholders' loans if you wish. It's all set out in Chapter 3. Did I answer your question, Dr. Basker, or you want more?
You did indeed. Thank you very much, Matt. So I think...
Sorry, Dr. Basker, I want to raise things that I forgot to mention in the presentation. Look, COVID this year has been difficult for everyone, and I think as the regulator, we've been accommodative. We've reduced the supervision fees by 50% for this year. A lot of our discussions with the firms and the applicants take place over either Skype or the other type, Zoom. And we're willing to bend a bit with respect to COVID. But one thing I have concern about is the regulated activity's got to take place in ADGM. Our jurisdictional reach is just the ADGM. So I don't mind middle and back offices been taking place elsewhere because of COVID. Of course, I want them all to be here as soon as possible. But when firms start to say, well, the SEO or somebody, the sales side are conducting activities far away from ADGM, I started to get a little bit worried because we don't have the jurisdictional reach. They could be subject to regulatory concerns by other regulators. So I'd like to see, even if the SEO has trouble getting into Abu Dhabi, structure your business so the regulated activities still take place here. Otherwise, there could situations will arise where nobody will be happy at the result.
Thank you, Matt. Matt, would you be able to give a bit more background as to the Compliance Officers Network group? Because quite a lot of new people have joined, and I know you did mention and suggest that people do join the Compliance Officer Network group. Would you be able to give some more thoughts about what have you done, what was the background, benefits? A bit more of that would be useful. Thank you.
Yeah, it was formed late last year, if I recall, probably this time last year, maybe a little bit earlier. Then COVID has delayed the number of meetings they've had. But there's a number of outsourced compliance firms and also compliance officers from a number of the authorised firms as well that have come together, and there's a discrete number of people that sort of are like the steering committee group, and then there's others that are participating in the meetings and hearing from other compliance officers about issues they're facing. There was a session done approximately 4 weeks ago where we presented, the FSRA presented, but we didn't remain in the meeting because I want this group to grow and basically be a voice for all the compliance officers and develop. As I said before, I have concern there's a number of compliance officers that really don't reach the mark. They struggle, and if they're struggling, then they're not doing the job I want them to do with respect to the firms. If they don't pick up the risks, it's more difficult for the FSRA. We have to pick it up on our reporting, pick it up on our thematic reviews, pick it up on our on-site assessment. So I do really think that the compliance officers and the money laundering reporting officers are essential for a well-regulated financial centre. And my hope, and a number of the individuals in the group, the hope is to develop this into a truly professional body where there's membership, there's benefits, there's education. Unfortunately, I'm getting a bit long in the tooth, so I won't be around to see it properly. But I'd like to come back in 10 years' time and see this thing as a full professional body with accreditation, maybe even the education side being accredited by universities. Something that people will be proud of to be part of the professional body. So I really encourage it, but I don't want the regulator running it. I want the individuals running it.
Thank you, Matt. Pretty clear. And I think that is, from the perspective of professional development, absolutely vital. Matt, a question came in from a LinkedIn user. It says, what about the grace period of the regulatory capital?
There is no grace period of the regulatory capital. If they're talking about the 20% buffer, you can't. The rule in the Prudential Rulebook, Chapter C, you must maintain your minimum capital requirement at all times. You breach that, then we're going to have a very interesting discussion. The buffer, the intention of holding the 20% buffer is to you to notify the FSRA that you're into that buffer zone, and this is how you're going to fix it up. You don't wait till you breach the capital requirement. But the thinking was, gives you a chance to fix up. Are you going to, issue more shares? Are you going to obtain a shareholder's loan? How are you going to fix up the capital requirement? And this goes back to the application form. I don't want applications where you're coming in and you're basically at the minimum capital requirement or the 20% buffer on day one. That to me just doesn't make sense. You've got to allow for, you you might think it's all roses and you're going to make money straight away. You 99 times out of 10, you don't. You basically you've got to get things set up. You've got office expenses. You've got to employ people even before you start invoicing and doing good work. So please, 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 when you're talking to the applicants, aim for at least 6 months. In fact, 12 months would even be better.
Great. So thank you very much, Matt. I think we should give a couple of minutes to our attendees to ask any final questions. But whilst they're thinking about it, Matt, do you have any final points that you wanted to raise?
No, I'm just looking from your notes here. I talked about COVID and the regulated activities having to take place in ADGM. I know it's difficult, and look, I'm happy, and my team are happy to have that discussion to work out how we get around it. It's problematic. I'm like with everybody else. I'm sure I'd like to see the vaccine come in very quickly and it all goes away. But I still think we're going to have difficulties for at least another 6 months. I would have thought. So we've just got to work through it. As I said, the frequently asked questions. A lot of them, I raised my eyebrow about them, about some of the questions, and I thought, my God, you're asking these sort of questions, but we'll go through the main ones and release that. I've said this, and every time a new applicant comes in, I'm always happy to have a call. I'm always happy to receive an email. I'm not the type of regulator. My team's not the same just to say go away and read it. We're happy to have the discussion, but I'd like you, the applicants and people who are providing the assistance, to at least have a try. Please open up the regulatory rule books and have a look at them.
Great. Thank you very much, Matt. So let me just try and summarize. It has been quite an exciting year for us. Got a lot of inquiries, an increase in the number of people who are going through the application process. And the ecosystem is growing quite rapidly, and next year it's going to be even bigger. So the reason why we wanted to set up this particular call and briefings going forward is just to bring our community closer together, hoping to help them with the process, avoid any issues, just make sure that the throughput is better. So a few things, if you will. First is, I see some people are asking for copies of the presentation and the webinar. So the recorded version of this webinar will be put up on our website, and you can access it there. The presentation with some more additional details, we will send it out at the end of next week's session. So there's going to be a single email with both FSRA CMI as well as BNI information. There's going to be, of course, my email in there. So if you have got any further questions, please feel free to ask me. We are also going to be requesting, if you can, send us some more thoughts. Well, did this work? Did you want to hear about something else? Are there particular areas that you wanted to delve deeper into? But this is just the first time, so obviously we are hoping to improve it as we go along. And if you need anything else, please let us know. So thank you very much indeed, and please make sure you register on our website, and you will have my details. And in anything else, please look me up on LinkedIn, and I look forward to hearing from you. Thank you very much indeed.
Thank you.